Hello, everyone. Jamie with Port St. Lucie Mortgage Brokers. Welcome back to the channel. Today, I am excited to speak with Heidi Sauber with Unitas Lending in Stuart. Hi, Heidi. How are you?
Good morning, Jamie.
Good morning. Today, we are going to talk about reverse mortgage. And one thing I learned is that Heidi's very proficient in this space. And I was picking her brain and I was like, Heidi, we got to talk. Let's make a video. She was really excited about doing this. So I appreciate you being on the channel. To be transparent, we are both mortgage brokers. We're both loan officers. We're in the same space, but that does not mean that we can't work together and help each other and help our community. So again, I'm definitely not an expert in the reverse mortgage, and I learned a lot from speaking with Heidi. So I wanted her to share her knowledge with all of us. So again, thank you, Heidi, for being on the channel.
Thank you, Jamie. It's a pleasure to be here. I'm so glad to be able to do this with you.
Absolutely. So I have my questions, because those that know me know that I forget very easily things. So I'm going to go down the list, and then I'll give an opportunity. I have already given the list to Heidi prior to this. So again, we'll kind of go through them. I have 10 questions and we'll knock them out one at a time. So I'm excited to learn about a little bit more about reverse mortgages. So thank you. All right, so let's get started. Number one, can you walk us through the ideal candidate for a reverse mortgage? What are the key qualifications and financial situations where this makes the most sense?
That's a great question, Jamie. So first and foremost, a reverse mortgage, also known as a HECM, which means a home equity conversion mortgage, is federally insured by the home loan, and it allows adult homeowners age 62 and older. Now in Florida, you can be 55 or older, to convert a percentage of their home equity into cash or a line of credit. So as I said, the age limit is 62 or above, but in Florida, we're fortunate to be 55 and above. Again, it's insured by the FHA, the Federal Housing Administration. You have to be able to have a home that you own outright or with a very low mortgage payment, because it is, again, a percentage. Desire to stay in the home. You have to live in the home in order to have a reverse mortgage. You have a need for supplementary income, whether you need to pay medical expenses or just looking to have income coming in for as you age. Understanding the loan, that they fully understand the implications and what the terms are of the reverse mortgage. You have to have financial stability. So you have to be able to, have residual income for this loan. The heirs have to be in consideration. That's a big portion of this. You have to include the heirs. They have to fully understand how this loan works and what happens when the loan becomes due. The health of the client, if they're in relatively good health, if they've looked at alternative options besides a reverse mortgage. So we go through everything on that. And property condition. The property has to be in good condition. And for those people who fit that criteria, it can provide a valuable resource of funds in retirement, and also make it lucrative to where, they don't have a mortgage payment, so they can go and they can travel and they can do, what they need to do.
Awesome. So just to clarify, because I know sometimes when I get this question from buyers or potential buyers or people that are looking to refinance into the reverse mortgages, they believe that the whole expense of the house will be taken care of, or not, they're not going to be liable for that. But we're only talking about the mortgage, meaning
Correct.
Principal and interest. So in those cases, what other things could they be responsible to pay?
So what they're responsible for is they're still responsible to pay their taxes and their insurance on the home. And of course, they have to keep the home in good condition. So as long as those three things are taken care of, they're in good shape.
Yep. And I'll add one more, HOAs.
HOAs, yes,
Yep.
of course.
So
yes.
I know that it might have just slipped, but all right. So my next question, what is the biggest misconception borrowers have about reverse mortgages, and how would you address them or address it?
So the biggest misconceptions that we get for reverse mortgages, the minute people hear that, is they're like, oh no, the bank is going to own my home. I want to own my home. And that is totally wrong. So years and years ago, these misconceptions were true. It was in a bad market. People took advantage of elderly people with reverse mortgages, and people did lose their homes. So the Consumer Financial Protection Bureau, or the CFPB, protects consumers in the financial marketplace. So they actually took over a few years back, and they made rules and regulations and put laws into effect for reverse mortgages. So, as we said, misconceptions, the reverse mortgage sells the home to the bank. No, that's not true. Lenders are not in the business of owning homes. So
they learned that the hard way in 2008. They're like, yeah, you know what? Maybe we don't want houses.
Yeah, they wish to make loans and earn interest. So the homeowner does keep the title of the home, but the lender does add a lien onto the title so they can guarantee that it will get paid back. Another misconception is that heirs will not inherit the home. Again, totally wrong. The estate inherits the home as usual, but there will be a lien on it for the amount of the reverse mortgage. So in other words, if the reverse mortgage owes $50,000 after 5 years, the homeowner passes away and sells the house, the heirs sell the home for $250,000, the lender gets their $50,000, the heirs get their $200,000. Now, another good thing about a reverse mortgage is it's a non-recourse loan. And what that means is, in a bad real estate environment, let's just say the reverse mortgage is $200,000 and the owner passes away, the reverse becomes due, but the home only sells for $100,000. So because it's FHA backed and it's a non-recourse loan, they will only have to pay that $100,000 and it'll be done and said. So that's a good thing.
Yep.
The homeowner could get forced out of the home. The HECM was created specifically around seniors to live in their homes for the rest of their lives. So they are not going to be evicted. They are not going to be foreclosed on. The homeowner pays taxes on a reverse mortgage. That's not considered income, so taxes are not paid on a reverse mortgage. There are no large out-of-pocket expenses, so they don't have to worry about that either. Now, what I am going to do, because I like to stay positive, is I'm going to give you the truth about reverse mortgages. So the truth is, you still own your home and you're free to sell it anytime you want. Truth number 2, as I said, the heirs are not responsible for the debt of the house as the house depreciates in value, if your house depreciates in value. Number 3, you don't need a mortgage to qualify. Number 4, you can use the home equity however you want. Number 5, there is no monthly mortgage payment. Now, some people like to have a payment. So there are 3 options.
Oh, I don't want a mortgage.
I know. But some people, they want their heirs to be able to get as much of the equity as they can. Yeah. So there are 3 options. You can pay no mortgage payment whatsoever. You can pay just the interest, so that way the principal doesn't raise, or you can make a mortgage payment. It's entirely up to you. You don't have to tell them, hey, I'm going to make a mortgage payment or I'm just going to pay interest. You just do it as you will. Another truth about a reverse mortgage is that there are strategic tools to increase cash flow on them. Less than 1% of any CFPB, the Consumer Financial Protection Bureau, complaints were on reverse mortgages. So that's less than 1%. And you can use a reverse mortgage to purchase a home.
Yep. A lot of
So
people don't
that's
have
the
them.
great things about reverse mortgages.
Yeah, and the people that do have them, I'll be honest, the feedback that I get is they love it. Like, it's really made a difference in their life and their lifestyle. They were able to travel or not have
Mhm.
that weight on their shoulders on a monthly basis. So especially with
Looking at-
things,
Go ahead. Sorry.
no, I was just gonna say with things, getting expensive around us. Maybe, of course,
Mhm.
not the mortgage payment, but
Right.
the groceries, just living expenses increase. Not having that weight does make their life a little bit easier.
And so many people, we are in Florida. We are the retirement capital of the
Yeah.
country. And so many people in years past, I'm from New York originally, so no New Yorkers, please don't come at me. But being from New York originally, so many New Yorkers were able to sell their homes, or anybody up north for that matter, sell their homes, get all the money, come down here and be able to affordably purchase a home with cash and still have money left over. That's not true anymore for Florida. So, a reverse mortgage definitely helps.
Yep. All right. Perfect. How has a reverse mortgage landscape changed in recent years, especially with the introduction of new rules and safeguards? And you touched on this. So if you just want to kind of touch on it, we could go to the next one. But I know you touched on this on your last answer.
Yeah, so one of them is the financial assessment requirement in 2015. Um, Reverse mortgages were easily accessible throughout checks on the borrower's financial stability, but now they just do a financial assessment to ensure the borrowers can afford ongoing expenses. Non-borrowing spouses protections. Back then, non-borrowing spouses were at risk of foreclosure if the borrowing spouse passed away. Now, the rules and protections are on the non-borrowing spouses and even non-borrowing owners. Back then, now they can stay in the home after the death of the borrowing spouse with certain conditions going on. Now, there are one of the things that's a safeguard is there's counseling requirements. So I could, preach the gospel to you on a reverse mortgage and make sure that you understand everything, but they have to do counseling. And so a third party comes in and they do a counseling session with the borrowers to make sure that they fully understand and that everything I or you have explained to them is what they understand of what the reverse mortgage does.
Perfect. All right. So what types of different reverse mortgages are there, and how does a borrower choose the right one for their needs?
So choosing the right one, obviously, you have a mortgage broker like you or myself that will sit down with them and fully explain each one to them. There is the HECM, the home equity conversion mortgage. That's the most popular. Some lenders have other proprietary reverse mortgages that they use. Each lender is different. The home equity conversion mortgage, like I said, is the most common. It offers several disbursement options, including lump sums, monthly payments, lines of credit, or combinations. The proprietary reverse mortgage, they're private loans and are backed by companies that develop them. Like I said, different lenders have different proprietary reverses. And there's a single purpose reverse mortgage. Those are offered by some state and local government agencies and nonprofit organizations and are least common to reverse mortgages. Now, how to choose the right reverse mortgage for you? We have to determine your needs. We do a full sit down. These mortgages are not like forward mortgages. It's not like, sometimes Jamie and I can get them to close in 10, 15 days.
Not these.
These typically take anywhere from 45 to 60 days to close. So, it's really a slow process, but it's giving the borrower and the family all of the information that's needed to help make the right determination of which one is going to fit the needs of the entire family.
Right. And one of the reasons, and correct me if I'm wrong, that it takes that long is because there are so many safeguards through that process.
Correct.
It's not something that we could or want to rush a borrower through and then have them, regret that decision. So we want to make sure that they take all those steps that have been outlined by the CFPB, FHA, and obviously the lenders.
Correct.
Perfect. All right. What are the costs associated with getting a reverse mortgage, and how do they compare to a traditional mortgage?
So with a reverse mortgage, your typical costs are higher at the beginning. But obviously over the life of the loan, you're not paying a mortgage payment. There's so many things. So reverse mortgage origination fees typically range about $2,500 to $6,000, depending on the loan amount. The maximum fee cap is at 2% of the first $200,000 of the home's value, plus 1% over the $200,000 with a cap of $6,000. Where in a traditional mortgage, it's usually at 0.5% to 1% of the loan amount, may include some application fees and underwriting fees. The biggest cost of your reverse mortgage at the beginning is going to be your mortgage insurance premium from FHA. Because it's FHA insured, there's an initial mortgage insurance premium of 2% of the appraised value and the maximum lending limit of $726,525, whichever is less, and an annual MIP of 0.5% over the outstanding balance, where in a traditional mortgage, it's required for conventional loans with a down payment of less than 20%. PMI can range from 0.3% to 1.5% per year. Appraisal fees are about the same, $300 to $600. Sometimes, and I've only seen it once so far, but you never know when they're going to kick it, but FHA will require a second appraisal on the home for whatever reason they don't state. Tried to look into it. I was like, why are we doing this? So there are servicing fees on reverse mortgages, and as well as servicing fees on traditional. So like I said, the biggest thing is going to be your FHA, your mortgage insurance premium. So everybody kind of gets sticker shock from that. But when you look at the whole big picture, it just makes sense because it is FHA backed.
Yep. And for explanation of the mortgage insurance, MIP, MI, those terms, that's an insurance that you're going to be paying to protect the lender, not for yourself. So I do get that question like, hey, do I have to take that insurance? I don't want to have that insurance. And they think it's for protection of them.
Right.
Just to clarify, that is an insurance that protects the lenders.
Correct.
All right. Perfect. So let's talk about the impacts on their heirs.
Mm-hmm.
Yeah. That's my my beautiful English. What happens to the home after the borrower passes away, moves out? And I've seen it where maybe they go to a living facility, things like that. Could you kind of touch a little bit on that?
Absolutely. So impact on the heirs. So this is why it's really important. This is a whole family affair. They have to understand that upon the borrower's death, or if permanently moved out of the home, the heirs must repay the loan, or that's when the loan becomes due and payable. So what happens is let's say the borrower passes away. The heirs ultimately have 12 months to decide what to do. So they get an initial 3 months that they can decide. They can either sell the home, repay the reverse and take the equity. They can refinance the loan. Some people, I have someone right now who lives with the parent and they're just going to take it over when they pass away. So you have that option. Or something we don't like to talk about, you can just let the home go. and it can be foreclosed upon. And that, again, is where the mortgage insurance comes in, because it protects the lender, because they will get something back on that. But going back to the year, when somebody passes away, grief is different for everyone. And, so that's why that they take into consideration that. And so you have the initial 3 months, and then you have three-month extensions that you can use to decide what you want to do with the property, if anything. So
Okay.
that's really, like I said, you can sell the home, you can pay off the loan, or you can let the lender just take ownership of the home.
Perfect. And look, and depending on the situation, if the
Mhm.
home may end up giving you more of a headache having to take over the home,
Yeah.
obviously there's an expense to take it over. You got to pay for the mortgage. That might be a good solution, is just let it go and not have to deal with it, and maybe have to sell it on the other side. So that's an option. But to clarify so again, if they're back upside down, sorry, on the home, let's say the mortgage is 200,000 and they owe 100,000, because this is again a question that I'm sure you hear a lot of, and
Mhm.
we hear, I hear a lot of, is what happens if they owe more than the mortgage?
So again, if they go to sell the home and they owe 200,000 on the home, and now the home is only worth 100,000, that's all that they're liable for. They are not liable for the difference. Thank you to FHA.
Awesome. All right. Are there any specific tax implications or benefits associated with reverse mortgages that borrowers should be aware of? And before you answer that question, let me start saying we're not accountants, we're
Right.
not financial advisors, right?
Mhm.
This is for very basic knowledge information. Speak to a
Correct.
mortgage officer. Let that be us, anyone out there, to get your professional advice, specifically when you're talking about accounting and tax implications and things like that. But there are some ways that this may impact taxes. So a couple ways that it may impact taxes. I'll let you take the floor on that.
So again, we are not accountants. Um, don't want to be.
I should put like a sign right now on the
Yes,
video stating that. So
exactly. So loan advances are not taxable income. The money you receive from a reverse mortgage is considered a loan advance, not income. Therefore, it's not subject to federal income tax. Interest deductions, interest on a reverse mortgage is deductible only when it's actually paid. So on a regular traditional mortgage, you can deduct the interest annually when you do
possibly.
your taxes.
Let's throw possibly.
Yes. Yes. Keyword possibly. But on a reverse mortgage, unless you are paying that interest, it cannot be deducted. If you use a reverse mortgage to pay off an existing traditional mortgage, you can still deduct the interest possibly on the traditional mortgage up to the IRS limits. And although reverse mortgages proceeds are not considered taxable income, they could affect your eligibility for means tested government programs such as Medicaid or supplement Social Security. Again, we're not accountants, but benefits, again, on a reverse mortgage is there's no monthly mortgage payments. You have access to the home equity. You have flexibility of how your funds are received. And big thing is it's a non-recourse loan.
Awesome. All right. We're going right through these.
Yeah,
We're getting close to the end here. We got
I
only two more
know.
questions. Awesome. All right. So for someone on the fence, what are the top three reasons? And again, if you have more or less of the three, but
Okay.
what are the top reasons you give them to consider on the reverse mortgage, to make it a serious consideration of that?
Absolutely. So it's supplementing your retirement income, gives you financial stability. A reverse mortgage can provide a steady stream of income or a lump sum payment, which can be particularly beneficial for retirees who find additional, and that they need additional savings income coming in for daily living costs, medical expenses, home improvements. And it's a deferred repayment, unlike traditional loans. A reverse mortgage doesn't require monthly payments. Home ownership and independence. Stay in your home. That's the biggest thing that I hear is when it comes time that people don't want to leave their homes. They're comfortable. It's their safe haven. They don't want to feel like a burden to their children or nieces or nephews or whoever they're going to go live with. So it gives them that stability to stay in the home and still have their freedoms to do what they want to do and not depend on other people. And there's no risk of foreclosure. And then it gives you financial planning, again, with the customizable payment options, you can do that as well. But those are, the biggest thing that I can drive home about reverse mortgages is everybody has to be involved. The entire
Yep.
family has to be involved. It's a sit down with myself. It's a sit down with your financial planner as well. And some financial planners will say, don't do it. That's one of my success stories. And I think it's because people are not educated enough on reverse mortgages.
Perfect. So one thing, just to clarify, as far as the foreclosure risk, of course, we have to take into account that they have to continue to make the payments on their taxes, right? They're
Correct.
responsible for those. They're responsible for the insurance on that property. They're responsible for HOAs or any other assessments that may be on that property. So you may not have to pay your mortgage, and your lender will not come back after you for not making that payment. But just keep in mind that you are responsible for those other expenses on the home. So I just want to make sure I touched on that. So, all right. So do you have a success story, a situation, a real life example of a reverse mortgage and how that helped?
I do. So I have two different ones. One is a reverse for purchase, which a lot of realtors out there, these are very lucrative for you. I had a retired nurse. She was moving from an apartment to, a first home, actually. She had enough money in the bank to pay for the home outright. She wanted a $550,000 brand new home, but she didn't want to use all of her money that she had because she, as we get older, we want to hold up to everything expenses, just like we've talked about.
Yeah.
So she did a reverse for purchase on the home. So again, a reverse for purchase, it's based off of age. So fortunately, the older you are, the better it is for you. The younger you are, the more you have to bring to closing. You still have to be able to bring a lucrative amount into closing. So she purchased a $550,000 home. She had to bring $350,000 to the table. So she saved herself and kept $200,000 in the bank for herself. And she didn't have to deplete her savings, and she doesn't have a mortgage payment.
That's awesome.
It's awesome. And she got the home that she wanted. Yeah. She didn't have to settle for less.
Especially with the rates where they're at today.
Yes.
Her having to take out a $300,000 mortgage would I don't know if she had an income stream or not, but it would have taken a big chunk of that, I'm sure. So especially with the higher rate. So awesome. Did you say you had another one as well?
I did. I had one. Actually, we had a client last year that we were, trying to educate her on reverse mortgages. And she's like, no, I don't want to do it. And so many people are like that, and that's okay. So
that gives us the opportunity to educate them, right?
Yes. So as much education as I did, she still decided to just purchase the home outright for cash. And literally 1 month later came to me and said, I have to reverse it. I need money. I now see, that I don't have enough money. So, unfortunately she had to pay, double for some things because she's already, paid closing costs and such on her first loan. We were able to save her on, like title fees, things like that. But we were able to get the money back out for her. And then in a year's time, she actually has a line of credit, which grows at 8%. And she can pull from that line of credit as well.
Awesome.
Yeah.
And again, they don't know what they don't know, and then they get into the home, and a lot of people think, and again, it's not only for the reverse mortgage, but people think that, hey, I got enough money, I got into the house.
Right.
Well, the washer's gonna go, the roof is gonna have to get redone. There's expenses, and especially when you get to that age, you might have a set. Sorry, my phone's ringing here. You may have a set, income stream, Social Security or a pension, which will make it difficult to save up to take care of those expenses, especially again in today's world. So that's
Correct.
awesome that you're able to help them. All right. So finally, number 10. What advice do you have for viewers who are starting to explore reverse mortgages? What are the first steps they should take?
So definitely, you have to get with an expert or someone that's proficient in reverse mortgages. So because you have to understand what a reverse mortgage is and what it does. You have to assess your financial situation, evaluate your needs, determine why you need a reverse mortgage. Common reasons include supplementing retirement income, paying off existing mortgages, covering healthcare expenses, making home improvements. Learn the basics. How do you become eligible? Make sure you're eligible for it. Are you 55 or older, or 62 and older, depending on what? Look at the costs and fees. There are a lot of costs and fees initially. Repayment, understanding the repayment, and educate yourself. We cannot do a reverse mortgage without you going through HUD counseling. So, it's really, really important. And consult with professionals. That is the big thing, is you have to be able to consult with, different professionals, comparing lenders, just like we do on a traditional mortgage. Talk to different lenders, shop around, understand the long-term implications of a reverse mortgage, the impact on the heirs, as we discussed, your living situation, and prepare for the application process. It's a big application process. We still have to run credit, even though, it's not based off of a credit score, but just having the necessary documentation that you need, and just stay informed, really stay informed.
Awesome. Heidi, I can't tell you how much I learned just in this conversation. I'm sure the audience did as well. Anything you wanted to add as far as closing remarks, or anything that you wanted to add regarding reverse mortgages that we didn't touch on?
No, I think you did a great job in asking me the questions that you did.
I cheated.
Yes, me too. Thank God you gave them to me ahead of time. It's just reverse mortgages are a big area. They can be a lucrative area for both lenders, mortgage brokers, real estate agents, for reverse for purchase, and just really understanding that that's out there, and getting with, financial planners, estate planners, all those people that deal with, elderly, even just talking, you talk to people every day, and, we could be talking, Jamie, and you're starting to tell me about your mom or your dad, and, what the situation is. Just really, you have to listen to what people say.
Absolutely. That's awesome. Last question. What's the best way someone could get a hold of you if they have questions and they may want to inquire about reverse mortgages or other financing options that you may offer them?
Absolutely. So my phone number is 772-342-2213. You can go on my Facebook page, Heidi Sauber, or Heidi Sauber at Unitas Lending. And all of my information is there, or you can reach me via email at hsauber@unitaslending.com.
Awesome. And I will have all Heidi's information on the video, on the details below. So feel free to look at that and reach out to her if you guys have any questions. Heidi, I can't thank you enough for taking the time to come on the video. I can't wait to hang out with you again and just talk mortgages, because it's fun. We enjoy it. That's our fun. Yeah. So again, thank you for coming on the channel. I appreciate you. I'm sure we're going to do it again. But other than that, thanks again. Okay.
Thanks, Jamie. Have a good day.
You as well. And to everyone else, have a fantastic day. I'll talk to you soon. Bye.